So let's come to the topic of the day: sectors that are rotating post the bottom recently. I'm calling it bottom because for now it is the bottom. It may not be, but let's assume that this is the bottom for now. Uh, so we have a correction from September end to 7th of April, which became the bottom. So CNX 500 lost 20% in this correction. So during this correction, all these different sectors, while the index corrected 20%, industrial services average return was 40% down. Manufacturing producer categories, these categories are taken off from the exchange, 31% down. Consumer non-durables 25%, utilities 32%, retail trade 40%, of which you can see first cry was down 57%, and in industrial you have SW Solar down 67%. Or it's electronic technology, here you have minus 28% on the sector, and APAR was down 56%. Then maybe process industries were down 25%, and Renuka was down 50% in this category. Health services down only 8% in this entire fall. So this was a completely outperforming sector. Here also Metropolis was down 40%, but Narayan Hrudayalaya was up 15%, up 15% during this period. So here you are able to see that uh, the number of stocks that really outperformed in each of these sectors was very limited in most of them. Like one stock out of 13 performed in industrial services, which outperformed minus 20% basically. In finance, out of 100 stocks, 39% outperformed, rest underperformed. Uh, so here, some of the best performer stocks are also listed here. So for instance, in finance, JSW Holding did 160% positive. You also had, for instance, Chambal Fertilizer in process industries up 12%, non-energy minerals 12%. So what you can see is that some industries on average did poorly, some did slightly better, and of them, the percentage of stocks within that space did very well. So health services certainly stands out right here. So within this 20% drop, you had all these stocks which remained positive. So despite the correction, you had many of these stocks which remained positive in that period. And of course, all these stocks on the right side were the worst hit, whether it was SW Solar at minus 67, Siemens at minus 66, Raymond's, Adani Green, Ola Electric, First Cry, Whirlpool, IndusInd Bank, and the list is long, 50% to 67%. Then came this last 8 or 9 sessions of recovery. And here the CNX 500 has jumped 12.6%. So the interesting part to see is what is the composition of the sectors and stocks that have moved in this jump up. So here we can see for this part of the recovery, CNX 500 is up 12.6, and there were certain sectors that have jumped a lot. So electronic technologies on average has jumped 24% in this period, where Keynes has done 51% within it. 94% of stocks within this sector have outperformed the CNX 500. Another sector that you can see is industrial services, distribution services, where stocks like L&T, stocks like Techno, stocks like Reddington have done really well, 47%, 29%. And the high percentage of stocks are outperforming within these sectors. Then you had some others like finance and technology services, where Chola Holding, KFin Tech, these have done quite well, 38% and 45% in just those 8 or 9 sessions. And then you also have some health services, 17%, where Vijaya has done 35%, and Max Health has not done so well. But several of these sectors have had very high percentage of stocks outperforming the CNX 500. So in this recovery of last 8 sessions, uh, um, you have the top performers as Keynes, Techno, KFintech, Gravita, Data Patterns, all doing 31 to 51% kind of gains in several of these stocks. And the bottom 20 is also, I mean, they are flat, they may not have performed, but nothing exceptionally bad really from that point of view. Now let's see what has been the average returns in the correction and then the recovery. So, for instance, retail trade, which was down 40%, has recovered about 11%. Um, sorry, 14%. The number of stocks that were outperforming was 11%, but now they're 60%. In electronic technology, you can see the exceptional move. It was down 28%. It came back up 24% very, very sharply. 38% were outperforming on the way down, but 94% are outperforming on the way up. So this is an exceptional performance here. Utilities were down 32%, 16% already recovered. 4% were outperforming on the way down. 83% are outperforming on the way up. Then you can see another one, perhaps distribution services, minus 27% on the way down, 20% already recovered from the bottom, 33% were outperforming on the way down, 83% outperforming on the way up. And the last one I'll take is energy and minerals, where 31% was lost, 16% from the bottom has been made, only 10% were outperforming, and now 80% of the stocks are outperforming the CNX 500. So we'll quickly go through some of these sectors. Sectors that did not do well in the correction. So when the market was coming down the last 4 5 months, they were not doing so well, but they have come back very strongly in the uptrend. So utilities, industrial services, distribution, and energy minerals. These are some of the high breadth of outperformance sectors that are there. Sectors that were doing well in the correction but are lagging in this uptrend are health services, uh, consumer non-durables, health technology. These are some of the sectors which are not doing so well in this current uptrend, and we'll come to the reasons perhaps and the inferences of this. Then there are sectors that performed very poorly in both phases, whether while coming down and the bounce so far. So commercial services, retail trade, technology services, consumer services have done poorly in both of the phases. And then there are two sectors that have done well in both phases. So electronic technology was doing reasonably well while coming down, and finance, and doing exceptionally well while the market is going up. Now, the correction phase insights, health focused sectors were the safe zone. So when market was correcting, high beta stocks are generally correcting fast, and health services, which is more of lower beta or defensive sector because it's an all weather sector, they just had a 8% average fall, and 82% of stocks were outperforming the CNX 500. Health technologies also was defensive with 21% average return minus, but 52% were beating the index. So this was basically providing capital protection and stock level consistency during that volatility. And you can see the stocks: Wockhardt Pharma, Narayan Hridayalaya, Laurus Labs, Aster DM. This is while the correction was happening. And the worst hit were Lupin, Newland, which were also up to only 20% down from that point. Also, in finance and consumer oriented sectors, they showed resilience. So, finance was down only 21%, with 39% stocks outperforming. Consumer non durables and consumer services both had 35 to 36% outperformers. So, some defensive bias was there in these sectors. Tech, however, was underperforming very badly, minus 32% in tech services. Only 13% stocks outperformed. Electronic technology was slightly better, but still underperforming, minus 28% average returns there. And deep correction was happening in cyclical and industrial segments. So, retail, trade, industrial services fell 40%. Utilities, transportation, commercial services also hit very, very hard. And no stock here was beating the CNX 500 index. So, high beta laggards and showing no relative strength. And in this uptrend that we've had for a few sessions, electronic technology has taken the crown. It has delivered the average return of 24%. 94% stocks in this segment are doing very well. Rare mix of alpha and breadth, which is just outperforming like anything. Keynes is up 51% in just these 8 9 sessions. Data patterns, PGEL, Vari, Premier, Sairma, Dixon, Power India, BDL, and the list is there in front of you. Distribution services and industrial services also have clocked plus 20% average returns. 83% of the breadth has done better than CNX 500. Industrial services returns of 21%, massive 73% outperformance here as well. So these two sectors have done very well as well. Utilities and energy minerals are modest 16%, but very good breadth in terms of 83% beating CNX 500. Finance, consumer durables, and transportations also up, not as much as these other sectors, but 70% stocks are outperforming, with consumer durables at plus 16 and transportation at plus 16. Health services very naturally have cooled off. So only a 8% fall during the correction, and post rebound, the breadth has dropped. So it is a profit taking sort of happening in defensive stocks, while the money is rotating into higher beta stocks. Consumer durables and commercial services, these have lagged. There is no strong signal of leadership or revival, and possibly there are better opportunities elsewhere. So this is how, very uh, not so obviously the internals of the market rotate, and that's how, the self-correcting strategies will take these cues and gradually wind into the newer sectors that are taking the lead. Now, I don't know whether the sectors that I have mentioned are going to continue to be in the lead for the future, but this is what the signals are showing right now, how the sectors are rotating, which sectors are taking a backseat, and which sectors are going forward. What are your thoughts on this rotation? Post the bottom. Do let me know in the comments. And thank you so much for watching. Do let us know your feedback on all these videos. We do put in significant effort to make these videos every day. Some feedback in terms of what you're liking or what you're not liking will be great to improve the services going forward. Do like and share these videos. Do subscribe to the channel, and I'll see you in the next one. Bye.